Recently, the People's Bank of China (PBOC) sent an important signal in its first quarter 2025 monetary policy implementation report. It pointed out that the warming of prices is slower than the growth of financial aggregates. In the future, the focus will shift from curbing high inflation to preventing low-price competition. This shift hints at underlying economic concerns. From the perspective of macroeconomic data, in April, the National Consumer Price Index (CPI) decreased by 0.1% year-on-year. In contrast, major global economies are mostly facing inflationary pressures, with CPI increases of 2% to 3% or even higher. While falling prices may seem to benefit consumers by allowing them to purchase goods at lower prices, within the broader economic context, low-price competition could trigger a chain reaction. Take the automobile industry as an example. In the first quarter of 2025, the profit margin of the automotive industry was only 3.9%. This means that after making significant efforts and incurring substantial costs in R&D, production, marketing, and after-sales service, car companies are left with slim profits. If businesses continue to struggle in a low-price competition environment, they will find it difficult to sustain operations and innovation, and may eventually fall into a vicious cycle. Low-price competition also leads to a strong wait-and-see attitude among consumers. As of March this year, the deposit amount of Chinese households exceeded 160 trillion yuan. If consumers expect continuing price decreases, they will delay purchases. This causes enterprises to face problems such as inventory build-up and difficulties in fund recovery, trapping them in a situation where the more they reduce prices, the more losses they incur. The increased operating pressure on businesses will affect recruitment and wage payments, which in turn will impact the job market and create a negative cycle. The central bank's emphasis on preventing low-price competition at this time aims to curb cutthroat competition and encourage enterprises to focus on high-quality development. This shift represents a key step in China's economic transition from extensive growth to refined development. From a social perspective, the anti-involution and anti-low-price trends are already evident in many fields. For example, e-commerce platforms have cancelled the refund-only policy. These measures help to regulate market order and promote healthy economic development. In the future, China's economy needs to find a balance in reasonable competition, ensuring that every yuan spent delivers corresponding value and enabling enterprises to establish their own advantages in competition. This is not only an essential requirement for sustainable economic development but also an important guarantee for ensuring employment, promoting consumption, and driving industrial upgrading. Consumption is not black and white. Healthy development is the key. Understanding the central bank's intentions makes it clear that the Chinese economy is moving towards more refined and efficient development.